After 3 consecutive years of negative returns, Chinese stocks have the potential to bounce back in 2024. Several factors could contribute to this recovery, such as economic growth, policy support, and undervaluation. So I've just gathered the best data I could find in the 2024 outlook from the biggest banks in the US to support our 2024 economic outlook for Chinese stocks. So with no further ado, let's start this video. First, let's talk about real GDP growth forecasts. It is expected to the world economy to continue to grow around 2.6% average. US is expected to grow 2.1% in 2024, while Europe is expected to grow around 0.9%. China is expected to grow around 4.8%. In my opinion, this is really good growth. Bear in mind, when you look into developed markets, US is expected to grow around 2.1%, which is really good for US. Europe around 0.9%. Growing around almost 5% is really good. Bear in mind, you were used to have China growing around 8%, 10%, double digits, but China is starting to get really big, and their economy is the second largest in the world. So it's gonna be difficult in the future to grow at a higher pace. When you look into India, which is a smaller economy, they are expecting to grow around 6.2%. It will be the higher grower in the next year. But look into the Chinese economy, they are expected to grow at a really good pace, in my opinion. So we will have a really good growth in their GDP. Their outlook this year, 2023, they just recover, and it is expected them to end the year growing around 5.2%. Their net exports are negative, which are not good, but there are some problems with US, Europe that are trying to decoupling from China, so net exports are taking a hit, and I do not believe they will recover in the near future, but consumptions are recovering, investment are recovering as well, so it is expected them to maintain this really good pace. About outlook, Goldman Sachs says they have their forecast. They believe that policy easing from the government should support China growth in 2024. One thing they say is near-term growth in China should benefit from further policy stimulus, but China multi-year slowdown will likely continue. So, what they want us to believe? They believe that this stimulus from the government and their economy is gonna recover slowing, but it is not expecting them to grow around more than 5%, like 8% or double digits, because they have their problems on their economy, which will be really difficult, and that will take time to solve. But they will grow, and they are growing as a growing economy. So what do I want to mean with that? They are growing at the 5% pace. This is really high, especially for the second biggest economy in the world. So bear in mind, their growth, even though is not higher growth that we see in the past, this is really good growth. Talking about valuation, China is really undervalued when you look into their PE and compared to the, for example, 25 average. Emerging markets are trading around their average right now, but China average was around 12% PE, 12 PE, I mean, and now it's trading around 9.5. This is in their lower end of the last 25 years, so this might be a really good opportunity. But bear in mind, China always trade at a lower PE, at a lower valuation. So, but when you compare to the average with the potential of their growth, this is a really compelling valuation in my opinion. But of course, there will be companies that are not so undervalued, other companies that are really, really overvalued. But we have to try to find the best opportunities, the best companies to minimize the risk, because that's why Chinese companies trade at a lower P, because there are a lot more risks in their companies investing on China than it is, for example, to invest in the US. When you look into this graph, when you look into China, it is the same. Their range, they are trading at their bottom lower of the range, and when you look into valuations, they are trading at the low valuations when you compare to the last 25 years. What do I want to mean with that? Even though they always trade at a lower valuation, at the moment that they are trading at their lowest in the last 25 years. So this was my favorite graph. I took it from the JP Morgan. They made a 2023 long-term capital market assumption expected return in the coming 10 to 15 years. So looking into the long term, they are expecting China to overperform the other types of investment. For example, if you are an investor in Chinese stocks, for example, it is expected for the market overall on China to return around almost 10%, which is really good. When you compare to US large cap, for example, for the next 10 to 15 years, they are expecting them to perform around 5-6% per year, which is not bad, but it's under the average for the S&P 500, for example, is around 9-10% per year, and due to some overvaluations, slower growth in the economy, problems with inflation, higher rates, they are expecting the US to underperform when compared to the last 25 years or the last century, for example, and that might be true. That's why, for example, me as an investor, I do believe US will perform really good. They have the best companies, but their valuations are not as attractive as, for example, China at the moment. And I don't mean that comparing PEs, but for example, the average for a Chinese company, the PE is around 12%, not percent, 12, and they are trading under 10. And for example, for the US, the average is around 15, 16, or maybe 17, and they are trading above 20. So that's what I want you to understand. So this is a really good asset. They expect better returns from China, Europe, large cap, and Japan and emerging markets. I could agree, but I want to be invested in the US and in China. To conclude, to end this video, they are bullish on China overall. Being the last 3 years were really bad for Chinese stocks, so when I see that, I turn out to be really bullish, because we have 3 years of negative returns, so the probability to have better returns in the future are higher. So when we have a company that's trading at a lower valuation, that having a rough time, probably they are undervalued, so the probability to them to overperform or outperform in the next few years are higher. So I like to look into that opportunity. That's why I really like to look into Chinese stocks, for example. And it's not me saying, but banks like Goldman Sachs and JP Morgan have really good data. I really love their data, and they are expecting better returns from Chinese stocks. But of course, we don't know if the 2024 will be a really good year, if they will overperform, if the return, if 2025 it is the year that China is recovering. We don't know that, but we have to have a long-term mindset, invest for the long term, and one day investor will see the value that Chinese companies have. So that's just the data I just gathered. I hope you find this video useful, and please, if you like, don't forget to like and subscribe. See you next time, guys.